This next panelist is going to teach us how to keep our money. Who here wants to do that? He personally helps Aaron keep his money. He has his own boutique wealth business. He has helped over 500 families, and he has flown in from Myrtle Beach just to give us that plan. Let's give a big round of applause for Justin Kramer!
I have never sold real estate. I don't have a real estate license, so I might be a little fish out of water here. But here's what I will do, because there's been a lot of really good content. John, Lars, I've really appreciated what you guys had to say. Kathleen, Jose. But here's what I want to do. I want to tell you about a huge problem that you have, but before I do that, I'm going to tell you how I'm going to solve it for you in 25 minutes. If you'll pay attention for 25 minutes, I'll show you how to make $50,000 to $250,000 more dollars this year without selling one more piece of real estate or doing one more hour of work. $50,000 to $250,000 in the next 25 minutes, okay? But you got to pay attention. I'd recommend you probably get out a note-taking device or something, because we're going to have to blow through some of this, right? Now, before I share what this problem is that you have, it was a problem that I had as well, I want to look at an illustration with you. How many of you know if you took a penny and you doubled it every day for 30 days? Okay, so 1 penny becomes 2, 2 becomes 4, 4 becomes 8. Double that penny every day for 30 days. What's that 1 penny now worth on the 30th day? Just blurt out some answers. What do you think?
6 million.
6 million. John says 6 million. Anybody else? It's like The Price is Right. You can just 10 million. $5,368,000. 1 penny. If you don't believe me, just Google it. It's right. I promise. $5,368,000. Now let's wait a second. We know in a society, in a country that we live in, anytime you make money, what do you have to pay? Of course. So let's assume that you're not in California or New York, and you're paying 28% in federal taxes. So now my question to you is this. You double that penny every day for 30 days, and every time you double it, you owe 28% in taxes. What does that 28% tax do to that number on the 30th day? What's it worth now? Half? It's worth $67,000. Let's be clear on what we're looking at. There's a $5.3 million difference with a 28% tax. $5.3 million. So if it's not clear already, what do you think your biggest problem is? It's taxes. And here's the thing about taxes. It's the problem you don't know you have, but that other people around you are solving and you're not. Tom Wheelwright, who's the CPA, the personal CPA for Robert Kiyosaki, you guys know who that is? Rich Dad, Poor Dad? Is his personal CPA. Years ago, I was talking with an accountant, and I was tired of paying taxes. And she said to me, that's the price you pay to make money. I said, that's a stupid answer. I reject that answer. I don't know what the answer is, but it can't be that. And so I went out when I didn't have the money and paid his firm 5 figures to be my personal CPA. I've spent thousands of personal hours. I've gone through Yale's School of Business Theory and Wealth Management to get to this point, to figure out we got one big problem, taxes. And there's a better way to solve it. Because if you can read this, it says taxes don't just take your money, they steal your time. Because your time is your money. And we all know that intellectually, but I want you to think about this. You're making a trade every single day. I'm going to give my time to this in order to receive this back. And we do that for comfort, for identity, for lifestyle. There's lots of reasons we're willing to make that trade. And that trade is leading us to not really own our time. We're like well-paid slaves to a system that we're operating in. And here's what I have found with highly disciplined. I was a former college athlete. I know a lot of athletes and high personality A drivers, really disciplined. a lot of you. What's your solution to this problem? That's right. But first, before we make more money, let's talk about how many problems we have. It's not just your income tax, it's your retirement account tax. Do you know there's $32 trillion sitting in retirement accounts right now? $32 trillion that's never been taxed. That is instantly $14 trillion of revenue to the federal government if they simply require you to distribute that out. And by the way, that's not congressional approval. That takes the IRS commissioner stroking his pen on a piece of paper, and you're done. But you also have another problem with taxes. Anytime you buy an asset and it goes up in value, good for you. That was a good decision. But then you owe taxes on it. So it's not just your money you're making in a year. It's the money you're stuffing into retirement accounts, and it's the assets you're buying while you try to create financial freedom. You've got tax problems all the way down the line. And as John said, your solution is this: just make more money. That's not the right solution. Making money, and this is neuroscience, making money has the same addictive qualities as opioids. What do opioids tell you when you're using them? This is good for me. This makes me feel okay. I need to do more of this. So what if the solution is not making more money? Our solution is let's keep more money. Pause on that for a second. What if you could make the same amount of money that you made in 2021, if that was everybody's best year, and work half the time? Work 75% less. John Maynard Keynes, who's a really, really well-known economist, said the avoidance of taxes is the only intellectual pursuit that gives any reward. So here's what I want to do. I think I got like 18 minutes left. I want to give you solutions that you can stick in your pocket and take home with you on how to solve each one of those problems. Okay? All right, number one, income tax, meaning the taxes you pay your federal, state, and local governments in a given year based off the money you make. And there's all kinds of taxes. There's a net investment income surtax, it's 3.9%. There's local taxes. There's FICA taxes, Social Security and Medicare. There's taxes everywhere. I was in Washington, D.C. one time, and this guy I noticed across from me had a different accent. I said, hey man, where are you from? He said, I'm from Iceland. I said, oh, Iceland. I've heard Iceland's awesome. He goes, it's great there because everything's free. I said, what do you mean everything's free? He said, our education's free, our healthcare's free, all public transit. I said, what are you paying taxes? He says, 77%. I said, brother, that's not free. That's expensive. Okay. Real estate, in my opinion, is the single best asset class that anyone can own for wealth building and multi-generational wealth creation, period. And I could give you 1,000 pages of information supporting that. And I'm actually going to deep dive into this in a minute. There's two things specifically about real estate with the moment that we're in. Number one, bonus depreciation. If you don't know what that is, you are robbing yourself and the families that you work with. I did a presentation to a group of tax attorneys and CPAs on the tax benefits of real estate. Tax attorneys and CPAs, and they didn't know what bonus depreciation was. So let me be clear. It's very likely that the team that you've paid to help you figure out how to do stuff doesn't even know what your best asset and weapon does, which is real estate. That's a problem. That's a big problem. And I'm gonna unpack this in a second. The second is what's called Section 1250 property. Here's what it means. There are certain real estate properties that you can buy that get a larger tax deduction than any other type of real estate, period. Primarily gas stations, car washes, etc. We don't have time to dive into that, but I'll unpack again this concept here in just a minute. Number two, solar. 2 years ago, Tesla lost $800 billion on their profit and loss statement. You imagine running a business losing $800 billion? But then the government pressed a button and created for them $1.5 billion in tax credits. Just so you know what a tax credit is, it just means they make up something and now you don't owe what you owed. So on paper, Tesla 2 years ago made $700 million, even though they lost $800 million. That's what a tax credit is, and it's available for you. You can use solar on residential properties. Think about your primary residence. You can use them on commercial properties. The government will do this. They will give you money, 32% federal tax credit right now, and then they'll let you take the value of that and depreciate it. Panels, charging stations, vehicles, there's stuff available for all this. Again, I'm rapid firing. I want to get to some other stuff too. Number 3, profit sharing and pension planning. So here's the concept is you take income from a given year. Let's say you made $1 million this year, okay? You wanted to take $250,000 and just tell the IRS you're going to pay them later on it. That's what this is. And they're known by lots of names: cash balance plan, pension planning, pension trust, 401k, SEP IRA, solo Ks. There's lots of different names for them. But all you're doing is deferring your taxes on a portion of your income. And I'm going to show you in just a minute how you get it out, and somebody else is going to pay the tax bill for you. But again, this is a way, because we're focused right now, how do I lower my taxes on my income for this year? Oil and gas partnerships. Years ago, and I mean like 50 years ago, in the early 1970s, we were involved in an oil embargo. Many of our parents, odd day, even day at the pump. You might have heard about that. We were running out of gas. And so IRS and Congress get in a room together and they say, how can we solve this problem? IRS raises their hand. They say, listen, if you want an American to do anything, you give them a tax incentive to do it. So that's what they did. They said, for every dollar that you invest in a US-based IRS approved oil and gas partnership, we'll give you a 92 cents on the dollar deduction against your income. Imagine investing in something that pays you a quarterly cash flow, 100 grand. Let's say that you invest $100,000 in it, and immediately the government says, hey, $92,000 deduction on your taxes. Thank you. Because here's what you need to understand. The government doesn't do anything unless it's good for them. Why would the government be incentivized to get you to invest in oil and gas? Is because they view energy independence as a national security issue. They want you to do that. Why does real estate have more tax benefits than any other asset class? Is because right now, according to the Federal Housing Bureau data, we've got 5.9 million too few homes. We don't have enough homes. And then there's an estimated 14 million homes that no longer meet safety standards. They want you to build, buy, sell, develop real estate. And so they're going to incentivize you from taxes. So if you can understand, how do I align my personal vision and values with the deductions, credits, and stack them together? That's how you pay the least amount of taxes possible. This is no separate tax code system. This is available to anybody willing to think differently and get the people on their team that can help them do that. All right, we got to keep moving. Proper entity setup. This is a lot of folks make money and just pay taxes on it. But there's better ways: S corporations, partnerships, parent companies, C corps. There's a lot of different ways to make sure you're properly structuring how your revenue comes in. Because just like not all income is created equal, let me say that differently. There are good forms of income and there's bad forms of income. And you, being a sole proprietor real estate agent, is the highest taxed form of income that there is. So that's what my CPA told me to do. It's because your CPA is not thinking about how to save you taxes. They're thinking about how to push out 1,400 tax returns in a 90-day period. But my tax attorney said this would optimize my income. Your tax attorney's worried about billing $400 an hour. He's just trying to get you out the door. It's your responsibility to find somebody you can put on your team that can help you think differently. All right, your second problem. Before we do that, I want to go back to real estate for a second. Real estate is the only investment I've ever found that pays you 4 ways. Appreciation. It goes up in value if you buy it right. Tax benefits through depreciation. Somebody else is paying down your debt for you. Imagine that if somebody just made your house payment for you every month. You're creating equity on your own balance sheet because it's going up in value and the debt's going down. You see that? You're spreading equity every year. And then the fourth is positive cash flow. So I want to look at, this is a real example. 2017, President Trump passed the Tax Cuts and Jobs Act. And here's what it said. We're going to take real estate. And it shouldn't surprise you whether you like Donald Trump or not. It doesn't matter. Shouldn't be surprised as to why he leaned into real estate and the tax incentives that exist. And by the way, the reason he paid $750 in federal taxes is because this is exactly what he did. He used depreciation and bonus depreciation to make millions of dollars and pay virtually nothing in taxes.
So, Vina, we're in agreement that if someone's not earning a minimum of $300,000 a year in active income, they shouldn't spend any time on their investments.
I definitely agree with that. I mean, the most valuable resource, a lot of people, and especially if you ask people that are lower socioeconomic status, they'll tell you it's money. And it really isn't. I don't care about money the way I care about my time. Money is, I see it purely as a tool to get the thing I want more of, which is time. So if I can buy my time back, that's what the money is good for. Other than that, it's just a tool.
Yeah, which I think is awesome. And this is coming from someone, you know, if you don't know Vina Jetty, she's a rock star in the multifamily. She's a large multifamily operator with 25 to 3,000 doors, done billions of dollars of, transactions. And it's interesting, Vina, because when I tell people that the majority of the money that I've invested is with professionals like yourself, and I take an LP position versus a general, a GP position, they usually look at me like, why would you ever do that?
Oh my gosh, why wouldn't you?
Yeah, like, so tell them. So me and you have the same response, which is like, why would I ever not do that? So why do you think that way?
Well, one, because I don't want to be a jack of all trades, master of none. And I know how much work and energy and effort goes into me being a master of multifamily and like knowing this one space so entirely well that I have more insight than anybody in this space does because I spend so much time just focusing on these insights. I also know that there are other asset classes which are really great opportunities, like self-storage. I love self-storage, especially in a recessionary market. Am I going to go out and learn all the things it's taken me over a decade to learn to be where I am today in the self-storage space? No. Am I ever going to be as good at it as somebody who's been doing it for a decade? Also no. So instead of me trying to go out, spend the time, the energy, the money, the resources to learn the things that I need to learn, including the mistakes that I'm inevitably going to make, I'd rather just go to Susie Smith, who's already figured it out, and be like, Susie, here's my check, take my $1 million and go put it into something wherever you put your money or whatever it looks like. And I'm being a little bit flippant. I don't think you should make investment decisions that callously, but the principle of it is still the same, right? So in my portfolio, like our trust, we have self-storage, I have retail, I have industrial, I have warehouse, I have restaurant, we're buying a bank. Like all of these things are things that I know they're good opportunities, but I can't actively manage. I'm just one person. I can only do one thing as great as I want to do it. And so that's where think of it like a partnership, right? Like having great partners who are literally experts in what they do. And, you and I have talked about this before too, right? Like if I'm going to sell my house, yeah, I can go sell it. They have like the for sale by owner sites. But if you look at the statistics, it's very clear that people who sell their own homes do significantly worse than if they call a broker. And it's like, I think of this mentality as like a really American mentality of being penny wise and pound foolish. And I think that's also why the majority of Americans don't have $500 for an emergency expense.
I agree. And I think they grow up hearing things, 65%, which is what you're referring to. I think the statistic is 65% of Americans live paycheck to paycheck. They couldn't come up with $5,000 in an emergency. And they hear things like money doesn't grow on trees.
Yeah.
Eat all the food on your plate.
Yeah. All of these things. It's like a fixed mindset.
A penny saved is a penny. And you know what my response is? I'm like, no, it's a penny. That's what it is.
Yeah. No, I agree.
And then I think they hear things which say, like, if you want something done, you have to do it yourself.
That is such a bad idea.
Yeah. So, and you said something there, which I really believe to be true, is this idea of operational partners.
Mm-hmm.
So what I became aware of is, and because you came from a corporate background as well, we were talking about that. And we were jokingly saying, like, when I was younger, I was like, oh yeah, like, people should get taxed more. And then you start stroking these big checks. You're like, wait a minute, time out. Like, where's this going? Like, that was a large amount of money, right? So, and that what got you into, this space because of the tax benefits. And what I'm aware of is the most valuable thing to me to build wealth is not my assets, it's my income. And for me to stay focused on active income and increasing my specialized knowledge and my skill set so I can earn more money. And then I have operational partners like yourself where I'm like, hey, what's going on with that deal? You're like, hey, here it is. We distribute monthly. Here's the distributions. I'm like, cool. I wire you the money and I'm out. I don't talk about anybody with the rent. When toilets go back, like I'm not nothing. We're only talking 3 times. There's a distribution. You're about to sell the property. Or something else is going on that you need to talk to me about for 10 minutes, right?
Yeah. And then you're emailing me a K1, hopefully, at some point. That's all I want. I want the negative K1. I don't actually care that much about the distribution, to be completely frank. For me, it's like the tax efficiency and then what's the overall IRR at exit. That's what I care about. Right.
Because I think that building wealth requires 3 things. The first is earning money, which the vast majority of people truthfully aren't great at. The second is keeping it, which also less people know how to do that. And the third is multiplying.
Yes.
And the multiplying thing, even less know how to do that. So talk to a little bit, like when you said IRR, for people who may not know what that is, it's internal rate of return. So if, let's say you're shooting for, because I know typically, and I don't want to speak, out of place, but like typically it's somewhere around like a 15 to 18% internal rate of return, including the distribution.
Oh, I don't know about that anymore.
No? Okay, so tell me.
Well, okay, I think you can get like a 15 to 18% IRR on like a 5-year hold on Class C assets, maybe. And we're being generous. And this is a market shift, right? Like 3 years ago, 5 years ago, on Class B value add, I could hit 18%. I hit 20%. I could hit 22% all day long. Now the market has shifted and adjusted. Debt rates have changed. So now we're seeing more like 12 to 15% IRR. And that's being conservative. Like we exited a deal in 2022 where we had like a 48% IRR. And for anyone who doesn't know what IRR actually means, and a lot of investors like to focus on this without really understanding it, it's basically a metric of what the return of your capital is, but it takes into account the time value of money. So what that means is if you give me $100,000 and I give you back $150,000, your IRR will be higher if I give you back $150,000 in 2 years versus 4 years, because it's the opportunity cost of the money, right? If you have it in 2 years, then you can go and you can reinvest that while this other person's still getting the same equity multiple or same return, but it's taking a longer time. So that's what an IRR calculation is for. It's really used when you have a lot of opportunity costs that you're trying to evaluate.
Got it. So, and that's the multiplication part, right? So even though there's like an opportunity cost for the capital, the goal is you want the money multiplying. And I have a mastermind group that I run, and I'm curious about your thoughts on this and why it's so important to be constantly and perpetually pushing assets or pushing money into assets that appreciate and give you a little drip. Just a little drip, not like a huge, but a little drip. And the example that I gave is like back in the day when, let's say the Roman emperor, when money was like hard, when it was like gold coins and maybe like some silver coins, bronze coins, right? Well, let's say the emperor wanted to pay for a war, but he didn't have the money. So he has 2 choices. One is to raise taxes. And how does that usually go?
Yeah, not great.
And back then the mob might like kill you, right? The other choice, which is, the stakes were high. The other choice was, and what he chose to do, is he would actually clip the coins. So if it was like a 5-gram gold piece, what he would do is he would clip a gram off. So what he's doing is he's stealing from the purchasing power of the citizenry in order to pay for stuff that he doesn't have money for. Well, what I was explaining to this mastermind group, because these are high income earners and they have a tendency to hoard cash. And I was like, what's happening is when we print money, we are clipping coins.
Yep. We're devaluing it.
Your purchasing power, they are stealing from the purchasing power of the citizenry to pay for things that they don't have money for. And that is why when me and you now go out to a restaurant, it's like $150. That's why. Because the purchasing power has been eroded because we've printed a substantial amount of money. So I asked them a question. I said, hey, what is the only way you can deal with that? And they were quiet. And I'm like, well, the only way you can deal with that is to aggressively push money into assets that appreciate in value and give you a little drip along the way. That's the only way.
Yep. 100%. And I think this is the problem, right? Like our schools, we don't teach about money. So a lot of people don't actually know how money works. They don't know like basic tax concepts that the wealthy have mastered, right? Like people that earn a lot of money, like I have a tax strategist. I don't have to know any of this stuff because I pay someone a lot of money to know it. And I pay him to constantly be reevaluating what we're doing, what we're investing into, where we need to reallocate money, how to take title to certain things, right? Like when I'm buying a car for the business, I send him a text. I'm like, hey, I'm about to spend $100,000 on a car. How do I buy this? Should I leverage the interest rates right now? I know it's expensive, but it might generate an expense that makes it worth it for us to create a new note, right? Like maybe we want to conserve cash so we can put it into something else so we can offset some other time. So I have someone who's globally looking at our picture constantly. And I don't know who you work with. We work with Larry West out of Frisco, and he's incredible. I'm sure he's tired of me sending him random texts like, hey, I'm buying a car today. What do I do? He's like,
I know. It's funny because I didn't realize, and to your point, what I learned is that building wealth is a team sport.
Oh, 100%.
And what I learned is that accountants' business model is actually not set up to give you advice. They are document preparation people. Their model is that they like acquire a client, they get a junior associate to fill out the documentation, and they make the spread. They have no vested interest in giving you actual guidance. So I need someone, like you have someone, which we hired last year, who the way that I describe it is like, the bookkeeper's like the running back, the CPA is like the wide receiver, and this person, for me, it's a guy named Justin. He's the quarterback. So what he's doing is reviewing all of your assets and saying, okay, you're going to make approximately this year. Here are the different investments we have at our disposal. Here are the different things that we can do to not only maximize how much of your income that you keep and like decrease exposure from a tax perspective, and also simultaneously like create wealth at the same time.
100%. But that is the hack, right? Like that is the key, is knowing and understanding how money works, or at least knowing that you need the team that knows and understands how money works and how depreciation works.
I don't know if you're like me, because you're a very smart person, and like sometimes he'll say stuff to me and I'm like, I understood maybe like 70% of what you just said to me.
Yeah. That's like most things when it comes to like the tax code. I'm like, so is this legal? He's like, yeah, of course. I'm like, okay, sounds good to me.
Yeah, let's do it. But like, and it's interesting because I just have to like let it flow by me, and I might grab like the gist, but I'm like, okay, I think I understand what we're doing here. Oh, so what he did, which was mind blowing to me, he said, if you took $1 and you let it double for 30 days, you end up with like $6 million, right? But then he said, if you tax that dollar every time it doubles by 20%, you end up with $64,000. So here's what he said, Vina, which was, really interesting. This was in a room. We just did a gala recently, and he flew in and talked to everybody. And he said, what is your guys' answer to this problem? You know what everybody said back?
What?
Make more money.
No.
And he was like, no, what if I told you making more money is not the answer? And that in of itself is like a complete mind shift. What I feel like it's like, if you've ever seen like The Matrix, it's like Morpheus being like, this is not what you think it is.
Yeah. No, but you know what? It reminds me of just yesterday, I had an interaction, And it is with someone who really, really, really wants to be an entrepreneur. And he just can't quite unlock the next level. And the problem is the way that he's thinking about money is so completely off base, but I'm empathetic to it because where was he going to learn this? He didn't grow up in a family that had knowledgeable parents. He hasn't been around even peers now that are knowledgeable. And so what he said to me is he said, I have a certain sum of money. Let's say it's $50,000, right? He says, I have $50,000. I'm like, wow, that's really impressive for you to have saved that up. Like, that's a lot of money to have saved up and to have. And I said, what are you doing with that money? He goes, oh, it's in my bank account. I'm waiting to see what I'm going to invest it in. And I'm like, how long has it been in your bank account? He said, for about 2.5 years.
Yes. Wow.
And I go, so you have it just in like a checking account? Is it in a high yield savings? And he's like, no. And I'm like, what are you doing? The last 2.5 years have been like 5% in money market CDs and high yield savings. You can get like 4 or 5%. He's like, yeah, but you know what I don't like is these big banks like Chase and Bank of America, they'll only give you that high rate up to $1 million. And then over that, they won't pay you that. And I go, you have $50,000. That is less than $1 million. Who cares what they do to people over $1 million? That's not your current problem right now.
If you're not making any money, well, you probably can't invest with me anyway. Most realtors aren't very good real estate investors. No. They're just good salespeople. Dude, you're broke. Okay. Yeah. You don't need a rental property.
Yeah.
Trust me.
I thought I knew what leverage was. I didn't. What most people don't realize what the real value is that the audience compounds. So if you look at all the richest people on planet Earth, Larry Ellison, Oracle, Code, Zuckerberg, Code, Tesla, Code, right? Because traditional success in our business is working 70, 80 hours a week. And you pound on your chest grossing like $1.5 million, but your net is like, you know, after expenses is not that much. A guy called me yesterday to create like a flipping company. I appreciate it. Thank you. I'm not interested in that at the moment.
I think that realtors, I don't even want to talk about realtors. Anyways, so, dude, you got like 1 million sayings.
Yeah.
Do you have a philosophical background?
No.
Still going on seller appointments, just fully focused on my house flipping business. And I said, guys, I'm done going on seller appointments. I'm going to go make YouTube videos.
Yeah.
Dude, everybody was like, you are an idiot.
Yeah.
Like, what's going on, Wealth Builders? Today, I've got somebody special. He is a real estate agent. Now, before you try and leave, okay? You know, I know I hate on real estate agents a lot, but I like what this guy is doing for many reasons. Number one, he's not just an agent, okay? Even though his credentials as an agent are incredible. He sold over 2,000 homes in a very short period of time. He's built a big downline, so he's got that stream of income. He's invested millions as an LP in syndications. So we'll talk about that. And he's also gone through our Wealthy Creator program and building his presence online and just making it happen. So I got none other than Aaron Novello. What's up, man?
What's up, brother? Appreciate being here with you.
Yeah, thanks for coming, man.
For sure.
So you guys are here for EXPCon.
Correct.
And now you're at the studio, dude.
I am. Yeah.
Is this your first time at the studio?
It's the first time, yes.
Okay. And where are you coming out of?
Fort Lauderdale.
Fort Lauderdale.
Yeah.
Nice, dude.
Yeah.
So, I mean, look, dude, you've got an impressive track record as a realtor. I mean, I like that you're actually just saying, hey, I'm going to focus on my craft and do it really good, and I'll just go invest my money into syndication so I can just keep building my business. I think a lot of people need to take that path, especially when they're a high-income earner, because I see a lot of high-income earners who are like, hey, I'm going to go buy a rental property, and then they go spend like hundreds of hours researching one rental property. It's going to go make them $200 a month.
Precisely. So I think that it's like an issue of focus. And what I believe to be true is like the average human has like 27,550 days on planet Earth. It's about 75 years in the industrialized world. Women have a tendency a little bit more than men, but that's what's average. So as somebody who's entrepreneurial, you see money everywhere. And there's 10 out of 10 opportunities everywhere. So I have to make an intentional, conscientious, purposeful decision about what to stack my time on top of. And what I realized is that I don't believe that people should focus primarily on their investments, the majority of people, until their investments produce more income than their earned income.
Okay.
And that's, for the most part, most people. So by staying completely dialed in and focused to selling real estate in high volume, I would store and invest about 50% of all the income I was earning into assets that pay me money, because I saw that as the vehicle to create freedom. And I'm aware that that works. It takes a while, but it does work. And that, allows me to just be 100% focused on what it is that I'm doing instead of getting distracted with duplexes or other things. And I always wanted access to the investment vehicle of real estate. I think what's also true is people have to know their natural disposition. Some people are not, their natural disposition isn't to like manage or maintain or all that other stuff. And I wanted access to the vehicle. And after I sat with it for a while, I had enough cash at one point to buy my own building. But I recognized like I really didn't want to do that. I wanted to just push it over to, let's say, a professional investor like yourself or like Grant or like other people. Be the money guy and just get distributions and get no phone calls. No nothing. You know what I mean?
A lot of people, man, and this, since I have these talks all the time, because I'm in a weird position where I teach real estate investing, and that's like what I'm always trying to get people to do, to learn on their own. But then there is the side where, we have Pineda Capital and we raise money, and people ask me, they're like, well, what path should I go? Should I learn to do it myself or should I invest with you? And usually my answer is, hey, if you're not making any money, well, you probably can't invest with me anyway. Like you just don't have the money to do it. So number one, definitely go to the education side. Let's teach you how to flip, wholesale, make active income. But the moment you're starting to make really good money, multiple six figures, especially if you become an accredited investor, then I'm like, well, you've got some choices. Like if your income is made through real estate, then maybe you're going to just start buying your own deals. You could do that. Okay. Most realtors aren't very good real estate investors. No. They're just good salespeople. So I'm like, if you're a realtor, it probably makes more sense to just give it to a syndicator, like you said. But if you're not in the real estate industry, man, this is where I like draw the line. And I'm like, hey, if you're making all your money in content or you're making all your money in some random industry, you trying to go learn real estate and manage one property and do all that stuff is not smart. You should just do your core business, give it to somebody you trust, and just keep focus on making more money with your core business.
Yeah. And to your point, I think if you're not at the accredited level, like let's say making $250,000 a year and have done that continuously for a few years, all of the money should be invested in yourself.
Yes.
To get to a place where you're earning enough income where you can actually have enough to store somewhere.
Yeah.
And then from the syndicator's perspective, again, do I give up some return? Sure. Do I give up some tax advantages because I'm an LP and not a GP? Yes. What I'm gaining is time.
Yeah.
And with that time, I can pour that into other things that will make me much more money over time. And what I've learned is in order to, in my opinion, having like $10,000 a month in residual income for most people will pay for housing, transportation, food, and insurance. You will be financially free and independent and no longer have to work specifically for money, but just for impact or because it is valuable to you or you enjoy it in some way. And to be able to get to that place, if I'm spending a lot of my time trying to get involved with investing instead of my craft, I think that it becomes a distraction.
Oh, no, 100%. People just have the false narrative that they need to start investing now.
Immediately.
Right away. And I'm like, dude, you're broke, okay? You don't need a rental property. Trust me, okay? You're actually going to probably get foreclosed on because you're broke. So let's take a step back and worry about just crafting, or honing our skills and our craft so that, we can start making some good active income.
Yeah, and I think people think that the mechanism to financial freedom is the type of assets you hold or how you hold them. It's really your income.
Yeah.
It's the main, it's the most powerful thing that you have to build wealth. And what I've recognized is that if you can learn and make yourself valuable to the point where you can earn a meaningful amount of money, if you can get a couple $1 million working at 6-7%,
you're
good.
Starts to add up.
It starts to add up. And then you can, again, once housing, transportation, food, and insurance is covered, now you can be more bold in your decision making.
Yeah.
You could be more bold with choices or vehicles that you're going to get involved in. Or, hey, I'm going to do this content thing and I want to go full out. I no longer have to worry that my family's lifestyle is going to change one bit.
Yeah. So let's talk about time management and opportunity cost, because that's kind of what you're referring to. And, before we jumped on this podcast, I was given your boy over there, Jose Luis, who was on an episode a couple of years ago.
Yeah.
We'll link to that down below. But you both are in a similar boat. You both are top producing agents. You both are in EXP. You're the only reason he has any kind of downline at all.
Yeah.
Because you're in it and doing all the work.
Yeah.
But nonetheless, you guys are both doing education as well.
Correct.
You both are investing in syndicate. I mean, you guys are like pretty much doing the same thing.
Correct.
Right? Where, with all those different income streams, do you focus your time at?
Yeah. So there's two mental maps that have radically changed the way that I think. And until recently, truthfully, I had a rudimentary understanding of leverage. I thought I knew what leverage was. I didn't. And the two pieces of information, one came from the Almanac of Novello, Ravikant, where he talks about the 4 forms of leverage. And at the bottom is labor. And it's the lowest form of leverage because labor gets sick, it gets tired, it quits, it wants more money, goes to a competitor, that sort of thing. But it's better than having no leverage. The second highest form of capital, as it goes up, it gets more powerful, is capital. Capital works 24 hours a day, 7 days a week. And it doesn't get sick, doesn't get tired, right? And those are the two pieces of leverage or forms of leverage that over the last couple hundred years, major institutions and individuals have used to create massive wealth. Because eventually, if you have enough capital, you can buy all the labor you need. Well, there's these two new forms of leverage that are available that within the last 30 years, all of the most richest people on planet Earth use, and they did it in 30 years where it took other people 200 years because they're that much more powerful. And that's content, which is your game, which is media, because that works 24 hours a day, 7 days a week with no geographic borders or boundaries. So if I put money into a building, it works 24 hours a day, 7 days a week in a building, but it's limited in its capacity. If I put it into content, that works 24 hours a day, 7 days a week, wherever there's an internet connection. And what most people don't realize what the real value is that the audience compounds.
Yeah, for sure.
Because as the audience compounds, you can service that. And you're a perfect example of that. So that's the third highest form. And the highest form is software. It's code.
Yeah.
Because code has no geographic borders or boundaries either. And it also costs almost no money to duplicate or replicate once it's been created once. So if you look at all the richest people on planet Earth, Larry Ellison, Oracle, code. Zuckerberg, code. Tesla, code, right? So that was the first mental map that caused me to take pause and be like, hey, this is a pattern. And I believe that if you want to create favorable outcomes, you need to recognize patterns and then use them. The second piece of information came from Hormozi, because there's a 5-minute clip on YouTube where he talks about the opportunity ladder. And when I started to really think about that, and the example he gives is like, let's say you work at a laundromat and you do laundry. It's like, well, do you have any leverage? No. Then it's like, all right, well, let's say you manage a laundromat. A little bit of leverage, but not much. Let's say you own the laundromat. You only have one form of leverage, which is labor. And that opportunity now is limited in capacity because you can only serve people within a 15-mile radius, right? Then let's say you franchise a laundromat. Now I have another form of leverage, which is capital. I can use other people's money to build out other, laundromats. And because I've added another form of leverage, now I can do it anywhere across the country. And it turned $1 million opportunity to a $100 million opportunity. Then let's say you create software for laundromats that makes them more profitable, more efficient. And all you do is take a small, tiny rip, like 2 pennies off, gross sales. Well, now because you've added that highest form of leverage, you took who can you serve? Everyone on planet Earth. And you took a $100 million opportunity turned to $1 billion opportunity. So I started to ask myself questions, Ryan. I was like, all right, what's the equivalent of doing laundry in real estate? Doing deals. So now I mess with Jose all the time. I'm like, hey, bro, are you doing laundry? You want me to send you some detergent? Right? What's the equivalent of managing a laundromat? Having a team. What's the equivalent of owning a laundromat? Owning an office. I used to own part of an office, right?
Yeah.
So owning an office. You're limited in capacity, you have only labor, and it's a limited opportunity. What's the equivalent of franchising? Those are these large franchises like Keller Williams, Century 21. They take a small franchise fee, and it's top line revenue, which is rev share, and they can do it all across the country. But then I started to ask myself, what's the equivalent of software? What is software that you can plug into to do transactions? Because all brokerages are really just platforms to process transactions with some kumbaya and some hand-holding. And what I realized is that cloud-based brokerages like EXP, it's just software. Because for $150 and $85 a month, you can plug into the software anywhere on planet So as I looked at those two, I realized, I'm not doing the media piece. That's why I got in contact with you and your team.
Yep.
Because I recognized the pattern. Then I recognized, doing deals is the lowest form. I'm on the lowest part of the opportunity ladder.
Yep.
And I was at a place in my life at 42, like my kids are 13 and 10. I wanted to reclaim time because traditional success in our business is working 70, 80 hours a week. And you pound on your chest grossing like $1.5 million, but your net is like, after expenses is not that much. Mm-hmm. And you're sacrificing a lot to do that because there's no way around it. There's only so much time in a day. So as I looked at all of that, got clear on why I wanted to do what I wanted to do, to climb the opportunity ladder and to use media, it became very clear to me that the highest and best use of my time is attraction. Because it's the most leveraged thing that I can do, period. Where if you, like people that are really wealthy, they get paid multiple times for doing something once. So like I've personally brought, let's say 40 people into the company, but those 40 have went out and got like 150, let's say 155. So that's like a multiple of 3x, 4x. And as it builds out, it'll be 25x, 30x, right? And I ask myself a question because there needs to be a filter to decide what's worth my time. The first one is does it compound and is it leveraged? With those two mental maps. If the answer is no, it goes away. I don't even look at it anymore. The second is a filter. Can I make at least $1 million a year doing this? If the answer is no, it's not worth my time. I'm not interested. Because there's a lot of people guy called me yesterday to create like a flipping company. And I'm like, look, dude, I appreciate it. Thank you. I'm not interested in that at the moment. I know I can make money doing that, but it's not leverage and it doesn't compound. It's just a mechanism to raise cash, and I'm not really interested in that at the moment.
Yeah.
So once I put it through those two filters, then I ask myself a question. Let's say I have 2 left, right? 2 opportunities. Now the question is, what is most in alignment with my natural disposition? And let's say like my gift or my ability. And then 2, which will allow me to have the biggest impact. That's the one I pick.
Yeah.
And for me, that's this. So that's then once I pick that, now I have to have the intestinal courage and fortitude to push everything into it. Because if I do 3 things at one time, I think my wife told me the other day and I chuckled. She's like, I think people would rather own 3 businesses that don't make money than one that does. Because it's just ego.
Yeah.
You're like, bro, I own like 3, So, and then it's having the intestinal fortitude to continue to say no over an extended period of time. It's sticking like V over T, volume over time. So I know, the same way I know the sky is blue and the grass is green, if I stay doing this for the next 5 years, I can make $1 million a year residually.
Yeah.
Which is the equivalent of $20 million invested at 6%.
Right.
Which, in order to get 20 million, I'd have to gross 40 or 50. How many people on planet Earth will ever in their lifetime gross that amount of money? It's infinitesimally small. But this vehicle, because of the fact that it's super high up the opportunity ladder and it's using the leverage, allows me to do that in a very short period of time.
Well, there's a lot to unpack there. First off, let me say, I've never heard a realtor talk about Novello. So you'll be the first that I've heard that, because most realtors are, like you said, they're focused on just making sales, doing labor, trading time for commissions. And, if they're lucky, they learn how to manage labor and build a team. And so they still kind of stay at that level 1 opportunity or level 1 leverage, as he would call it. And, they're happy, right? I think that realtors, I don't even want to talk about realtors. Anyways, that's kind of like the benchmark. If you could go make a couple $100,000 as a realtor, you're balling, killing it. Everybody loves you. Well, you start ascending up the ladder and you start to realize, like, man, there's these new opportunities. What's that look like? And, the same thing happened for me. When I first started, I was a realtor, right? And eventually I started flipping couches, and that's labor. I was like, dude, I'm making good money doing this, right? And then I traded for a new labor, which was flipping houses. And, made $1 million doing that. And I'm like, wow, this is great. We're doing this, doing labor. I added capital to the mix, obviously. That allowed me to buy more houses and scale the business. So I was getting good at the first 2. And then around the pandemic, I learned that, man, content is king.
Yes.
We have to start doing this. And so I started making content during the pandemic, and I've seen the fruits in my own life, how much it keeps compounding year over year, the opportunities it presents, everything else that comes with it. And tech becomes that 4th layer. Yeah. And, we got a few different tech things going on. I'm an owner in a few that I don't publicly talk about, but tech is huge, man. And so when you're able to utilize, and we're trying to add tech into our different companies too, to keep customers more sticky,
Sure,
and enhance the overall value of the company with tech. So totally agree with all those points, man. Yeah. So with that, okay, obviously you're talking about EXP being one of those opportunities with getting to that fourth level, maybe one of the only opportunities in real estate, right?
I agree.
And I just look at, let's just say, for real estate agents, Zillow was probably like the biggest example of a tech company doing it and making it happen. And they, they tried to actually go downgrade,
Yes.
and get capital and flip and do all this crap,
Yes.
and they realized, like, man, why did we just do that?
Yeah.
We were making so much money just running ads. It was crazy.
Yeah. And selling leads to agents for like 33%.
Yeah.
Which is insane.
Yeah.
Right. And I think what I became aware of as I started to think and marinate on this more, because I mean, you know this because you're, wildly successful business owner, is that business is about outmaneuvering people, and it's about recognizing patterns and then having the courage to use them. Right. So one of the other things I began, as I started to think about this and combine the opportunity ladder with Novello, I realized that cloud-based brokerages like EXP, they're just YouTube. So YouTube went to their content creators in 2007 or 8, whenever it was, and they said, hey guys, we recognize something. We need you because we have a platform, but we don't exist without you. We need content. So we're going to create a symbiotic relationship that's win-win, meaning we will give you, if you have 1,000 subscribers and 4,000 hours of watch time, we will give you a portion, right, of all the revenue that we generate from ads on your content, like 50, 55%.
Mm-hmm.
Now, the first question is that a scam? The answer is no. That's an economic model called revenue sharing.
Yeah, and then it's about impact. It's not about money anymore. So that's one of the things that Lars would tell me. He's like, bro, this isn't about money anymore. Like, this is about impact, and it's about time. I was thinking about all the different evolutions. So like, it started off where it's like, I just want to do 100 deals, like the way I saw myself, right? Then I would read, I was obsessed with freedom, and I read like Jacob Lutzker's like Early Retirement Extreme, where he would live off like fucking lentils and tuna fish, right? So he only had to pay like, his expenses were like $12,000 a year. So if he had a job where he made like 100, you can invest all the difference, and then you can quit working early. And then the Dave Ramsey stage, like pay all your shit off and, fully fund retirement accounts. And I did that diligently. Again, I just saw myself as just like the Heisman Trophy winner of listing property. That's the way I saw myself. So I wouldn't deviate from anything outside of that. I realized that I had a meaningful net worth of a couple $1 million, but I didn't feel wealthy, and I still had to sell real estate to pay bills because I didn't have a lot of residual income. And I heard Grant say having all your money tied up in your house and in a retirement plan is another form of poverty. And I was like, that's fucking crazy, because that's true. And then I started to make changes. It began with changes in moving, even though that sounds strange. So the reason why I can give people so much shit about like them taking so long to make decisions is because my tendency in the past was to be exceptionally like conservative, really, really motivated by certainty. Like I did the reason why I'm giving you shit about buying something in the same place, I did that. I bought a 2-bedroom, which I don't know what the fuck I was thinking, because my wife said we wanted to have 2 kids. That's not true. I was scared, so I went smaller. We lived in that for 7 years. I paid it off. And we stayed there with 2 children, one sleeping in the living room and one in their room, for a whole year after Liliana was born. Then I went out and bought a 3-bedroom, but guess what? In the same neighborhood. And we paid that off or whatever. But then I started to realize, like, bro, this isn't, and I would be on these mastermind calls, and there's people that are in their 50s and 60s, and they're still talking about fucking contacts and shit. I'm like, bro, something's wrong. And then I started to change. The first change came with we moved, which you would think, and it was interesting because Carla was like, I got like a little like, I don't know how I feel about this, She's like, babe, we're not, I never want to be attached to a house. It's just a space. It's not, you know what I mean? And I think it's good because it's different. It's different. Different energy, different vibes, like it's movement. Instead of being like I'm gonna stay here and like protect, right? So we did that, and that was the first one. And then I did something that was interesting in alignment with what I thought to be true, is I took the money that I would have used to buy that house and I invested it. And most people would think that that's crazy. Remember, I know I sound crazy to a lazy mind, right? So a syndication with Grant. And that paid like, I don't know, $1,100 a month. So instead of buying something and having a payment, now the rent from that place and the rent from the syndication pays for where I live. But that's like a hard shift away from what everybody else does. And then came the company thing, where you kept telling me, and I was like, nah, bro, I'm good. And I really thought I was right. Like hard. We would triangulate ideas, right? And I was right about, truth is on a spectrum. I was right, but there was something else that was more true, right? But then once I saw it, I was like, oh, okay, got that. That makes sense to me. Started aggressively moving in that direction, but then started to flirt with the idea. Like, I haven't gone on a listing appointment in 6 months. 5 years ago, that was like a year ago, 2 years ago, that was completely unthinkable. Like, not even.
What does that feel like?
I was talking to Carl about this. It's like every new peak is like new air. So if you go up in altitude, the oxygen concentration is less. So it takes time to get acclimated to it. It takes time to get used to it. But for the first 2 months, I was not. It was weird. It was weird, yeah. I was uncomfortable. I'm like,
Restless?
a little restless, yeah, like, and Lars just kept telling me, 2 things. Lars kept telling me, he's like, bro, I've seen your financials. You're gonna die with a lot of money. Like, you don't need to worry about it. The second is Carla did a profit first statement where every week I can see cash in and cash out. Because even though you have resources doesn't mean you don't have anxiety around money. So I would see the cash in, cash out. I'm like, as long as it's green, we're fucking fine. It could be $200 green, like we're fine. You know what I'm saying? So that was also helpful. But Carla's gone through it too, where it's like, you know, she's like, oh, well, you know, I feel like my sister's, because, you know, she's on the team, she's working, but like I'm going to yoga class. I'm like, it's because you're the boss. Like, she worked to be able to do that. Yeah, she worked to be able to do that. And so, but that was like incomprehensible to me, even a year ago, 12 months ago, 15 months ago. Like, it wasn't even something that I would even think about. And now, and then with the short-term rental thing, and then what I'm going to do is I'm going to sell the place that I had rented, and I'm going to go and I'm going to buy 2 short-term rentals this year. In our previous conversations, when I was so sold on syndications, what would I say to you?
That syndications was the best way to do it.
Yeah.
Management, the missing pieces,
Taxes.
and having the right person.
Partner. So I wouldn't do it without an operational partner, right? Otherwise I really wouldn't. I'd just keep doing syndication. But we have the operational partner now, so check this out. I rent where I live, and I just bought a short-term rental. I sound crazy to a lazy mind. Most people would be like, what are you doing, bro? Yeah, and what I'm doing is I'm like, with whether it's syndications or the short-term rentals plus rev share, now it's like.
Which one do you like better, this one or the last one we stayed in?
Oh, that's a good question.
Which one do you see yourself more living in?
Oh, living in? I don't know.
For you to live in?
They're both pretty similar.
Yeah.
Yeah, I'd have a pickleball court instead of a basketball court.
Yeah.
Yeah.
2 acres or 1 acre?
1 acre. Yeah. Yeah, and I'm starting to like see that, you know? But that's a long way from my dad's a furniture repairman, and when we used to walk into houses like these, I'd watch him get small. You ever seen somebody do that? Where they like in a way genuflect, right? So that would make me be like, oh shit, like this is like outside of us, right? But the way I'm starting to see myself now is like, all right, I give talks. I do events like these. Like I fly and meet with partners, right? That's what my role has become. But it's completely different. If you look at my calendar from what I was doing 12 months ago to what I'm doing today, it's completely different. Before it was filled with listing appointments and prospecting and negotiating. Now it's filled with third-party calls, coaching calls, and speaking events. But that's an evolution, right? But if I wasn't doing that, I wouldn't be able to serve you guys. I wouldn't be able to keep expanding because my thinking would be stuck. Does that make sense? But it baffles me, like it's unbelievable to me how much has happened because I've changed my mind. That's it. Just changing my mind along the way. I was like, Dave Ramsey's the way, and I wasn't wrong. Remember, truth is on a spectrum. I wasn't completely wrong, but there was something else that was more true. When I say syndications is the way, I'm not completely wrong. It just depends on circumstances. Like, those can be true. But something can be more true. And if I'm clear enough on the why, like Chris and like Ben, and it's important to me enough, I won't take the lazy route of just thinking I have to work harder.
I'll do my best to figure it out, because everybody has the capacity to figure it out. And plus you have people that are in the process of figuring out. Because I don't think I figured it out like completely, but we're in the process of it for sure. Does that make sense? So what is margin? Margin in life refers to the space between our commitments, responsibilities, and activities, and the limits of our physical, mental, and emotional capacity.
Welcome to our first annual Elite Builders Gala. We are so excited to have you here for a full power pack